It's the beginning of a new month, and that can only mean one thing. It is time for your piping hot monthly Bitcoin digest. We've got a lot to cover today, especially around the theme of surveillance, and so you're not going to want to miss a thing. Let's jump in. Welcome back to another video. My name is Ian Major. I'm an entrepreneur, Bitcoin pleb, and all-around raging capitalist. And today we're going to go through a number of topics, as we usually do with these monthly digests. I'm going to kick things off with a little bit around recent price action, some of the on-chain analysis. Now, those of you who have been watching the channel for a long time know that I don't really do this to predict kind of near-term price levels, right? Like, frankly, I could care less about the exchange rate in fiat. But rather, this is so that you can better understand the market and its various participants and how they're thinking and what their incentives are, such that when things happen and we get big sell-offs like we've seen over the course of January, you can have the heightened resolve and conviction knowing what's going on underneath the surface. And it's just going to add to the steeliness of your hands to HODL. So that's kind of the point of why we start off with that. And then I'm going to get into a number of topics around geopolitics, regulation, surveillance. This is a big one, and I think the storm clouds are sort of forming. So again, you will not want to miss a minute of this. For those returning to the channel, welcome, my friends. As always, it is a pleasure to have you. And for those new to the channel, I welcome you as well. I know there are many of you, over 80% of you watching this right now, in fact, are not subscribed. So if you like this content, I invite you to consider subscribing and join us in our merry growing gang in cyberspace. I cover all manner of Bitcoin-related content, including news and analysis like this, but also a slew of different tutorials, whether it's around wallets, securing Bitcoin, acquiring Bitcoin, non-KYC, running your own node. You want it, I cover it. It is as simple as that. But with all that out of the way, let's jump in first to some of the recent price action and on-chain analysis. All right, my friends, so let's jump into it. We are going to launch into a great thread from none other than Dylan Leclerc. Bitcoin at 35K. How do we get here and what possibly comes next? As I always do, I'll link all these kind of threads and discussions in the description down below so you can take a look in more detail if you would like. But basically, as Dylan takes us through, point one is just obviously this kind of correlation we've seen between Bitcoin and other risk assets as the Federal Reserve in the US postures and repostures around how many times it's going to raise rates and how it's going to tighten its belt in terms of liquidity and quantitative easing and all this good stuff, right? So that has been kind of the big story for the last month or so. And has been a real driver of the sell-off. And critically, as Dylan points out in this next view, like there's a reason for this. A big part of the run-up in 2021, sort of leading into 2021, was, of course, the absolute behemoth that is Grayscale. So Grayscale is buying up all this Bitcoin, and then institutional investors and sort of macro funds are gaining exposure to Bitcoin through the Grayscale trust shares. And so you can see that, this huge parabolic run-up leading into early 2021, and then it sort of flatlines basically a little bit down as well, all the way to where we are today. And most recently, over the last few weeks, we've seen a ton of selling of GBTC. So that's the ticker for the Grayscale Bitcoin Trust. And so, this aligns well, right? Like Grayscale was this kind of massive player that led to some of the levels we saw last year. And indeed, as those same kind of macro investors have, gone risk off, right? You've seen the price of Bitcoin go with it. So this is just important to understand the composition of participants. Right now, a lot of the price action is being driven by kind of big macro funds. And as we'll see later from the derivatives picture, kind of established incumbents who are just kind of trading bets back and forth. And so where does that leave us in terms of kind of, valuation? And a lot of people are saying, was that the bottom? Are we still to see the bottom, etc.? I really like this ratio of, market value, so essentially price, right, which is the blue line here, against the realized price, which is the orange line. And this is a much more almost smoothed out, nets out a lot of the kind of day-to-day volatility. And that is because realized price is sort of the aggregate price at which coins have last moved. So naturally, you would expect for an asset like Bitcoin that you will have a ratio greater than 1 because the market price is going to be higher than the realized price because you have, you're always going to have a lot of hodlers that are just not doing anything with their coins. And so as Dylan says on the right, currently this ratio is sitting at about 1.5. And as we continue on this next view, that ratio falling below 1 have served as just like absolutely ridiculous, generational, as he calls it, buying opportunities. And so that corresponds to about 24K. So, right, like that gun to someone's head is probably a pretty good bet of like, if we haven't seen the bottom, like where might that bottom lie? That is a pretty darn good guess. Now, at the same time, though, we have this additional view from Will Clemente, and this is looking at entity-adjusted dormancy flow. So this orange line here is basically more or less measuring the degree to which older or newer coins are moving. And so when this metric goes up, it basically means more coin days are being destroyed, which means that old coins are moving more so than young coins. And as this measure goes down, that means the opposite. That means that there's sort of less coin days being destroyed, and this typically would equate to long-term hodlers hodling. Now, there was some interesting distribution that was observed from long-term hodlers in January, but it sort of remains to be seen whether that was kind of a blip or in reaction to some of the macro Fed stuff and the broader stock market nerves and all this. But suffice it to say, like between these two measures, which I think are very good signals, you have one that says, well, maybe there's a little, like, if we're not at the bottom, maybe there's a little more to go. And this other one that says, actually, like, we're at the 4th most oversold in history, according to, dormancy flow. So do with that what you will. Again, whole point of this is not to predict near-term price action, but to give you a sense of what is happening underneath the hood. And like granted, highlight some of these levels for purposes of, let's say you have a dollar cost averaging plan, so you're putting the same amount in every single week, but like you have a little bit of dry powder saved up for, blasting that into some really big dip. And so, maybe this will help you time that. Although again, I would always advocate for a just plain boring DCA, putting the same in every single day, every single week, however you want to do it, etc. And all of this is kind of well reflected what we see in the derivatives market. Dylan is basically showing perp funding rates here. And so really all this is saying is that the bulls are definitely not being aggressive after the sell-off we've seen. But it's not the case either that the bears are being super aggressive with leverage, in derivatives. And so that harkens back to the fact that maybe there is more volatility to come on the to the downside, and we see this as well reflected from this view from Byzantine General, where OI or open interest. So this is basically just the amount of sort of aggregate positioning that derivatives traders are taking. We can see that this hasn't been flushed, right? This sort of middle chart here hasn't been flushed, or it hasn't, gone down materially over the last, month plus. And so this means that like there is a lot of leverage in the system, and so if something moves one way or another, it could be pretty volatile and chaotic. So again, a little bit of a mixed bag, honestly, if you look at all this. But I think it's like reasonably safe to say that even if we haven't hit the bottom yet, it's probably not that far away. But my friends, I hope you find that interesting as I do. But at the end of the day, there is only one important takeaway. And it is the following from Priced in Bitcoin. And it is that Bitcoin wins no matter what, right? And I think a lot of people have not adequately digested this, right? Like they're looking at the lower right-hand corner where the Fed pivots. It says, actually, sorry guys, we're kidding. We can't actually have the stock market sell off to where baby boomers literally don't have any retirement funds and they starve in their retirement years. We can't have that happen. So we will keep things propped up and we will keep the markets on. And so, what happens there? The dollar, of course, is going to go, down. Inflation continues, blah, 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 blah. Like, people view that as the only lens through which Bitcoin wins and succeeds. And this is actually missing a huge part of the story. If we go to the top bubble, right, Fed hikes, so they continue. Maybe they not only continue with what they're planning, but they literally go even harder. Like they want to really send this message to markets that says, look, we're not going to let inflation run hot. We're not going to kill the dollar, even though our debt to GDP is at 130% or so, and so rate hikes are literally impossible. But we're still going to pretend like we're going to do it anyway, right? Like even if they went through with all of it, there is enormous counterparty risk when it comes to debt unwinds and defaults. And so while people are certainly not going to realize it initially, right? They're going to flock to dollars in the near term, in the short term, if this were to happen. But ultimately, they're going to realize like dollars have enormous counterparty risk. And so the only thing that doesn't is a kind of physical bearer instrument like physical gold or obviously the much better choice, Bitcoin. So even that path is going to leave here. And while this other third piece I don't think is necessarily like a third option. I think this actually, can be a blend of either of the other two. But this whole path that we're on around, central bank digital currencies, it's definitely a question of when and not if. Western democracies are absolutely going to copy what China is doing and has done. There's going to be a ton of surveillance, social credit scores, like all that is absolutely coming. And so again, I don't think this is a discrete third option. I think it overlaps with one of these other pieces. But again, do you want that future either? So the point is, no matter what we see, ultimately Bitcoin wins. It's just a question of at what time scale. So with all that, let's now pivot over and talk a little bit about some of the interesting dots that I see are being connected around the world of surveillance. All right, so quite a few interesting kind of signposts coming out in the realm of regulation and kind of geopolitical optics. And so let's kind of break this apart a bit. First, kicking things off, we had, the Biden administration coming out and saying, regulation of Bitcoin and crypto assets is a matter of national security, right? So, what a surprise. It says, this is designed to look holistically at digital assets and develop a set of policies that give coherency to what the government is trying to do in this space. A person familiar with the White House's plan told Barron's, and all these kind of nonsense agencies and entities are going to be participating. And how they'll rationalize all this is hidden in the following statement. Because digital assets don't stay in one country, it's necessary to work with other countries on, quote, synchronization, the person added. So you can pretty easily see where this is heading, right? In the name of anti-money laundering, you're going to have potentially intergovernmental kind of entities, non-elected bureaucrats forming that kind of posture around different rules and regulations. And we'll get to a potential example of what that could look like in just a bit. But that's, interesting on the surface. But we should ask the question, what's driving this? All of a sudden this came out in, a matter of national security. It says that in the coming weeks, we're going to see more clarity on what this means. Let's think about this, what matter of national security, why might that be? Well, we need to look no further than Russia. So what's been going on in Russia? First, January 21st, as you can see, Russia proposes ban on use and mining of cryptocurrencies. So this definitely, made people look and say, oh, another country announcing a ban. Wow, that hasn't happened before, has it? And indeed, several days later, on January 26th, Russia has advantages in Bitcoin mining, Putin says, and expressly asks the central bank and government to come to consensus on Bitcoin regulation. So Putin basically said, dear central bank, we're not going to ban this. We are going to regulate this. And, he comes out kind of swinging, saying we have advantages in something like Bitcoin mining. And then, oh, by the way, a few days after that, it came, this stories going around that, Russians own a lot of cryptocurrencies. And so think about this from a geopolitical lens, right? Like, Russia and Ukraine, you have this kind of tension, and, the U.S. has threatened sanctions. And so this could include cutting Russia off from the SWIFT payment system, which would, prohibit kind of international settlement with Russia using the financial rails that, the global kind of community uses. And so it's very interesting. It's this kind of tit for tat. Russia's saying, well, if you do that, right, if you ban me from, the payment, from the SWIFT payment rails, I'm just going to use, crypto payment rails, which are permissionless. And so this, I think, is the real crux and kernel of why this is suddenly a matter of, quote, national security. And to give a more concrete flavor of like what might this lead to, we need to look no further than something that is being proposed as this is all unfolding, and that is the America Competes Act. So this was January 27th. Came out, House bill could let Treasury Secretary block international crypto transactions. And so in this America Competes Act, which, I won't kind of get into in this video more broadly, it seems like a, pile of junk as these acts usually are. But a provision within that would have given the Treasury Secretary the power to block U.S. firms such as exchanges from interacting with, certain crypto transactions, right? And so it gives this kind of like godlike power of the, Treasury, powers of censorship over crypto transactions. Now, fortunately, a few days later, after, some heated lobbying from the industry, this provision is fortunately going to be removed. So on one hand, I think this is great, right? It shows that there is some real kind of muscle. It's not great that we have to have lobbying of any kind, but the fact that we do have to have it, it's good to see some of these compromises being achieved. With that being said, I think this is just the start, right? Like this is just an example. So again, sort of good news for now that, that provision has been removed, but again, it is only a matter of time. I think if for anyone willing to pay attention, this is all only heading in one direction. And so I will urge you once again, as I always do on this channel, to take custody of your Bitcoin. Do not leave it on exchanges. Who knows the series of different restrictions and protocols that you'll need to do to withdraw, your money before too long, right? Now, what's also interesting is that all of this is happening and unfolding in parallel to yet another thing. So the AOPP, or Address Ownership Proof Protocol, is something that's been kind of doing the rounds. Samurai Wallet has, I think, the best breakdown of what this is and why they're not supporting it. And it's been awesome to see a number of other wallets, come out and say they're not supporting it either. But this basically comes from, this is directly from the AOPP.group website. This initiative was formed by 21 Analytics with the support of Shift Crypto. And it is basically this protocol that makes it easy for a user to kind of verify that an external address indeed belongs to them. Said another way, this is essentially to say, like, an exchange requires you to personally connect your identity to an external address that you're withdrawing your Bitcoin to. Proponents of this will say, well, look, like regulators are going to do this anyway, and so all this is to make it easier for the user to comply with those regulations. It makes it easy for you to be able to use your private keys to sign a message that proves that you indeed own the address that you're withdrawing your Bitcoin to, right? And so proponents of this would say, well, if you don't have this, then the user is going to be more likely to leave the Bitcoin on exchanges. And it's a decent point. I definitely get that, but I think the spirit of how Samurai Wallet and others, Blue Wallet, Trezor even came out and said that it would remove support for this after the initial story broke that Trezor was sort of supporting this. So it's been really cool to see the community rally behind this. And the argument against this is, let's not play into this. Like, let's not excuse this behavior. Let's not invite further regulatory and surveillance creep. And so I love to see how the community has reacted to this. I think every major wallet provider at this point has come out and basically said we're not doing this. That being said, if you are somewhere in Switzerland, that sucks. That's the one place in the world that has sort of gone with actually kind of regulating the guidance from who is actually behind all the sort of surveillance here. Financial Action Task Force, or FATF, as you have probably seen them. And so, this is some intergovernmental, unelected set of bureaucrats that basically come out with best practices or suggestions for, ways to reduce or, lower the incidence of money laundering and all this stuff, right? And so Financial Action Task Force has come out and, said, hey, we believe people should do this. Switzerland currently is the only jurisdiction that's actually implemented it. And so that does mean, unfortunately, if you are in Switzerland as a user using a exchange in Switzerland that would presumably require you to do this, you would have to kind of verify that the address you're withdrawing to belongs to you. And of course, this ties your identity to it. So again, it's just an interesting parallel thread. I don't know that there was sort of malintent on the behalf of AOPP here, but it certainly is in the form of the Financial Action Task Force. And so it remains to be seen how some of this comes together. But again, I think these are just all sort of trees within the same growing forest of surveillance that we will definitely see. Now, switching gears quite a bit, it was also interesting to see the president of El Salvador meeting with Erdogan in Turkey. And so, of course, Turkey has seen an absolutely devastating slide in the lira's value versus the dollar. And so anytime that happens, that puts a ton of pressure on a country such as Turkey. And indeed, citizens in Turkey are, buying Bitcoin, big users and buyers of Bitcoin. And so it was interesting to kind of see that meeting. And indeed, one of the outcomes coming out of that is that Erdogan ordered, his sort of government to, to come to some sort of consensus around regulation, etc. So interesting to see. There's also talk of who's going to be the next, second and third nation that adopts Bitcoin as legal tender. You have Tonga in the running. You have, a couple countries in Central America, South America that continue to be on the list. So it'll be interesting to see how this plays out. El Salvador is obviously a huge deal, but the second and third are going to kind of confirm that trend, and I think could be even more of a big deal. If you're in the U.S., even closer to home, you probably saw the news, or maybe you haven't, that Arizona has indeed proposed that Bitcoin is legal tender for Arizona. So it is just like crazy to see, honestly. Arizona, Texas, Florida, Wyoming, new political candidates by the day, it seems, are saying, I'm pro-Bitcoin, blah, 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 blah. And all the kind of cries for, well, the government's just going to ban this outright, kind of melt away. That doesn't mean that we're out of the woods. As I've just mentioned, the woods that we really need to be thinking about are the woods of surveillance. And so that is going to be a specter that continues to haunt us all. With all that, let's go ahead and wrap today's video up. So there you go, my friends. We covered a lot of ground in this edition. We talked about some of the recent price action and on-chain analysis. And we also talked about these various very interesting threads at the kind of geopolitical level, nation-state level, regulation, surveillance. And the important takeaway is that, number one, you see the game theory of Bitcoin playing out with nations sort of signaling support for it, and even jurisdictions within nations such as states in the US doing the same. But as that inexorable game theory progresses, you're also going to see more and more kind of surveillance and regulation and potentially governments sort of collaborating across international lines, such as what we saw being proposed in the America Competes Act. So it remains to be seen, but the actionable kind of advice and guidance is to get your Bitcoin off exchanges, Consider ways that you might acquire Bitcoin in a non-KYC fashion. I have videos on all of these topics that you will find on the channel. So I hope you found this valuable and useful. If you did, you already know what to do. Give this video a like, smash that like button. Let me know your thoughts and questions. What do you think? Let me know in the comments down below. But for now, we'll go ahead and leave this here. As always, my friends, every sat counts. And until next time, I'll see you then.